Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And in this particular presentation, I'm going to go over ratios. I call it ratio day. And what ratios tell us is relative value of an asset versus an asset and how they're performing against each other. We want to see one asset that we're in outperforming the other asset. And over time, we want to continue to monitor that asset outperformance or underperformance, depending on what you're looking at. So I'm going to go over the 10-year yield because that affects the overall environment. We're going to look at the dollar, and then we're going to look at a lot of the ratios that we are in. So let's hit it up. Call this ratio day. Again, let's chart ratios to see how assets are performing against each other. And again, this is only financial education only. So here is the 10-year. We've got a downtrend line break to the upside, and maybe this thing's going to head back down a little bit. We could see a pullback in the markets even, because if money's coming back into bonds, the dollar could potentially strengthen a little bit as well, and we could see a pullback in some of our companies. Now, again, we have a downtrend line that broke to the upside, and this could be a pullback kind of resting period that we saw from a large move higher in terms of how quickly this thing moved. So we could see a little bit of a pullback and then an eventual increasing. And you can also tell that Yellen was talking about potentially increasing interest rates and how it would be good for America. So I think that they are potentially looking at not them increasing the rates. They're just going to let the market increase the rates for them because they're probably figuring out that they can't hold the rates down themselves. It's going to cost them too much money. So we'll see what happens on the short term. It does look like it could potentially pull back yields, that is, which means higher bonds and potential headwind for some of our investments if the dollar goes up. This is what the dollar looks like. We're right there at support. We've got support here. We could say that this is a shoulder, head, and shoulder kind of developing. We could break to the downside, which then would bring probably rates back up. So we'll see what happens here. We'll see. Now, in terms of ratios, this is the copper to gold ratio. Downtrend line broke to the upside, and we're moving higher. This very well could continue to pull back a little bit before moving higher. So we've been on a tear here. Copper's vastly outperformed gold. So this could reverse a little bit. We could head back down and have a little bit of a rest. But we're still well above the trend line. We're still looking very good. Here's the Dow to gold ratio. You can see that it broke to the upside here, signaling that the Dow was actually outperforming gold. Now, what I'm expecting here is that gold's going to outperform the Dow and head back down, especially if interest rates go higher. That's going to be a big one. It's going to be a headwind for stocks and a tailwind for precious metals and commodities. So we could come, all the way back, and if we need to break through this line again. But at the moment, we are above the line and we are pulling back. I'd like to see it really pull back, but we'll see. We'll see what happens. Gold versus oil. We broke the up. We'll call this the uptrend line here. Broke it to the downside. Oil is outperforming gold, and usually when this happens, if you've got copper outperforming gold, you have oil outperforming gold. We are usually in a commodity bull market when this happens. And I expect this to go all the way down to a value at a commodity top of something below 10 or 8. So below 10, possibly below 8, maybe even to 6. Maybe. Here's gold to silver ratio. Again, this is signaling that we're commodity boom. Silver's outperforming gold. It's contracting. We're at 67.77, and we're right at this trend line area. Is this going to come back up, or are we going to come back down? And remember, this could come up a little bit if we do have a pullback, because silver is usually a supercharged move in relationship to gold. Here's the platinum to gold ratio. Platinum has been underperforming gold on the very short term for the past, I would say May it has been. And it looks like we're just doing a back test. We've got the big long trend line. We broke to the upside, went sideways, said, there's too many buyers up here for platinum. And it's heading back down a little bit. And then maybe I think it'll turn and move back up. So we'll see what happens. But right now, gold is outperforming platinum on the very short term. Here's the platinum to palladium ratio. Platinum has pulled back in relationship to palladium. It's pulling back, and we're right at this trend line here. Let's see if this trend line holds, which I think it will. We'll see if it moves on back up, which means platinum is going to outperform palladium. And I think it's going to take a little bit of time for that to happen. And here's the real estate to gold ratio. I just wanted to hit this one up. This is a big long-term chart. I kind of touched these guys here. The potential could go way down where gold could buy a lot more real estate if we're in a big bull market for gold. We could come back, I got this trend line here. We could be coming back up where real estate starts to outperform gold over time. So gold made this bottom when gold was expensive. Same with this one. And I think what happens is the housing market peaks before it. Gold has a big move higher, and the ratio drops quite dramatically at the end of the bull market. We are at the beginning of this kind of bull market, so we might see real estate take off a little bit in relationship to gold for a little while before I think it heads back down. So think of it as maybe, trying to think of how we would relate this to 19. We could be at 71 here, and then we see this big drop down, and we might see some pullback ups like this. So we might see it kind of pull up and then pull back down, something like that. So this area right there. And we could pull all the way back down here somewhere, pretty low. So it'd be a nice opportunity to buy, I would say, like silver or platinum, because it's probably going to outperform in relationship to home prices. And then the Dow to gold ratio, we are up around 20. It's on the expensive side for the Dow. This very well could go all the way back up to like a super bubble territory. It could. Doesn't mean it will. But at some point, I'm expecting this to turn and go back down and head back here. If interest rates go up, I think it's going to say, no, and then come back. Just like this here is below 20 for the boom of 1929, and we are at that same area as 1929. So we could, at any time, have gold outperform the Dow quite dramatically. And that's what I'm expecting. I'm expecting that. We are in an expansion phase of real estate. So that's what the ratios are telling us. It's saying that a commodity bull market is game on if you look at platinum, silver, oil, and all those, because they're all outperforming gold. In this type of environment, I think gold and precious metals are going to outperform real estate. Real estate will still go up. I think precious metals will just go up faster. I think if rates increase, now it's a big if. If rates increase, it's going to be a huge headwind to the Dow and regular stocks. So what I expect with the chart right next to me is that this guy is going to come on back down. That's if the market conditions force all this. And Janet Yellen, some of these, they're talking about, well, maybe rates are going to have to go higher, and they probably are already starting to realize this. Now, if rates go higher, it's going to be a stiff headwind for stocks. And commodities is going to be a tailwind, because that's going to rotate money from stocks into commodities. At least that's what it's done in the past. So that's what the ratios are telling us. Everything, it looks like it's game on. I don't see any huge trend lines that are broken to the wrong side. And it looks good. So we continue to sit in our investments. If you guys like this presentation, give me a thumbs up. Leave comments below if you have any comments or questions. And thank you for listening. This is Finding Value.